Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Wednesday, January 20th, 2021. And here are our top stories. Inauguration 2021, what to expect from the new president, the economy, and the U.S. stock market in 2021, and what clients and financial advisors should be thinking about during this year. Well, joining me now to discuss this and more is Dr. David Kelly. He's Chief Global Strategist for JP Morgan Asset Management. Dr. Kelly, David, thanks for joining us on the program this morning.
You're very welcome. Glad to do this.
So 12 o'clock today, we're going to have a new president sworn in. They're going to take the oath of office. And a lot of people will be watching, of course. But I wanted to get your sense. We talked to you in December about kind of looking back into 2020 and maybe a look ahead. But let's talk about some of the, where things stand right now and maybe some of the challenges that a new administration and new cabinet members may face with this economy.
Well, it certainly is very challenging. I think it's made a little bit easier for the new administration, given that the Democrats won those 2 seats in Georgia. And the reason that's important is because I think the most important power of the majority in the Senate is to set the agenda for the Senate. And so this way, I think the Democrats will be able to put bills that they want to pass on the floor for discussion. Now, for most legislation going through the Senate, you still need 60 votes. So I think you're not going to see radical legislation, but I think you may see some movement that you might not have seen if the Democrats had not taken the Senate. But there certainly is a lot to talk about. I mean, I think you've got to think about how do they deal with the pandemic? How do they, wind it down as fast as possible? I think there are big issues in the short run about how to stimulate the economy, but also how to really support people through the rest of the pandemic. And then the longer term issues of how do you make this economy grow fast enough to pay back at least some part of all of the debt we've accumulated in the last few years.
So David, let's talk about the pandemic first. We've got a vaccine and maybe a little bit different policy approach here. I know that the current administration or the previous administration, well, actually, they're still current because they haven't been sworn in yet. The new administration hasn't been sworn in yet. But that be as it may, we've got vaccine distribution, and I know that there's a little bit of a change of policy. They want to get all the vaccine doses out to people, but from a business perspective, from a work perspective, from an employment perspective, what about this vaccine distribution, and what are you looking for as a chief economist?
Well, it is frustratingly slow. I mean, this is the easy part in theory, but you really needed from the start to have a national plan and national guidelines on precisely who gets what, how many people are in Group A, Group B, Group C, and all the way down, and prioritize them. And then also prioritize them. Once you've got a group, you've got to figure out how to get Mr. and Mrs. Smith to get the vaccine, and then how to get Mr. and Mrs. Jones to. And there should have been a lot of more order about this to start with. But that's hindsight now. I think that every state will be working very hard to try to make their programs more efficient and more speedy in terms of vaccinating. And the 2 vaccines that have been approved so far by Moderna and Pfizer, those companies have promised enough doses for 200 million Americans by the end of July. And I think they will follow through on that. And I think that we will quite likely get another vaccine approved. So I think there will be enough vaccine. I think the ramp up of distribution will be sufficient so that by the summer, everybody who wants a vaccine will have one. And I would say, by the way, I think the vast majority of people will be vaccinated. I know that some people are suspicious about vaccines, but do you want to get the disease or do you want to get the vaccine? Because you know what? The people have asked me, what if people don't want to get vaccinated? Well, the truth is, if you don't get vaccinated, this thing is so contagious, you're going to get the virus. So by the end of the year, everybody's going to have some immunity. The question is, did you get it through the vaccine or did you get it through the virus? And so I think that's how it's going to play out. It's frustratingly slow to start with, but I think that it will roll out. And one other thing that's important, I think that because they're vaccinating older people first, that will cause mortalities to fall much more quickly than cases. So I think that by the time we get to the spring, thankfully, the horrible number of people who are dying every day from this will fall very dramatically.
David, you mentioned the United States population getting vaccinated. What about, some of these economies around the world, emerging markets, some of the European countries are still shuttered. UK had a significant spike. What about reopening some of that travel? That's really important. I mean, the travel industry has been decimated, airlines, hotels, et cetera. What about reopening some of that? I mean, do you anticipate that there'll be distribution in some of these other, I know you're not necessarily a health expert, but that there'll be an opportunity to reopen some of these economies?
Well, our global market insights team, of course, around the world is following this in each of these major economies. And really, it's a pretty synchronized worldwide effort in terms of distributing vaccines. Some countries have got better vaccines and better distributions than others. But I think that the bottom line is it's not safe to do massive travel, entertainment, restaurants, and so forth until the population has achieved herd immunity. I expect that to be achieved around the world, in all the developed world, really, by September. Even for some emerging markets, there will be many billions of people who have not been vaccinated in emerging markets. They tend to have younger populations, though. And so I expect, sadly, the disease will generate a lot of immunity in those areas, too. So I really think that by the end of this year, we will see a worldwide moving on from the pandemic. And that's when these industries can open up. You need government support until they can open up. But I think we've seen the cost of trying to jump the gun here. That's why we've got this enormous surge in the pandemic over the winter.
David, when you look at the Federal Reserve, I know that's certainly an area that you look at regularly with interest rates. What do you think we can expect? We're going to have a new Treasury Secretary. I believe Janet Yellen is going to be affirmed by the Senate. She'll be the Treasury Secretary. But what might we expect from this Federal Reserve? And again, I don't want to put you on the spot, but just some ideas, some concepts people might want to take notice of.
Well, I think that Jay Powell and Janet Yellen are very close in terms of policy. I think they're also good friends. And that actually may help coordinate policy a little bit here. But I think both of them would admit that there's only so much the Federal Reserve can do. Low interest rates can facilitate stronger economic growth, but you need other things to work first. So I think you will see a big fiscal package out of the Biden administration early in the administration. And really the question is, how much stimulus do they get into the economy through that? Certainly support for people through the end of the pandemic. But the more you do on the fiscal side, the less the Fed has to do on the monetary side. So what we think the Fed will do is, we think they are very easy. They're very dovish. I think they'll keep short-term interest rates at 0 to 25 basis points on the federal funds rate all the way through 2023, maybe to the end of 2023. But I think they will also, if the economy is improving rapidly, as I think will be the case as we turn the year into 2022, if that's going on, I think the Federal Reserve will begin to taper its bond purchases. And that will allow long-term interest rates go up. So you're going to look at a steeper yield curve coming up here, because the Federal Reserve won't need to be as easy if the federal government is doing more to help stimulate the economy and the pandemic is over.
David, last question for this segment. Gas prices, and in particular, oil prices and natural gas prices. So some of these commodities that we rely on to get around, we're not driving as much. But what would you expect in terms of the price of gasoline? Will it go up? The price of heating oil, natural gas for cooking, et cetera?
Well, we might see some increases because I think, as I've said, we're going to get this synchronized worldwide expansion in travel and activity, and that probably will push up. That will push up the demand for oil. But I think also going forward, longer term, first of all, we've got very high inventories because of what we've been through. But also longer term, I think we're going to have a greener policy. I think the Biden administration will sign on to the Paris Climate Accord again. I think there's going to be a lot of emphasis in growing green technologies. And that will, I think, put a lid on the growth in global demand for oil and natural gas. And so I don't expect to see very high prices in the next few years. I think those prices will stay pretty well under control.
Well, thanks, David. I want to take a very quick break. When we come back, we'll talk about how the new administration applies to financial advisors and also individual investors. What should they think about? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Hi folks, Joe Namath here, and if you're on Medicare, this is important. You're now entitled to eliminate copays and get dental care, dentures, eyeglasses, prescription coverage, in-home aids, unlimited transportation, and home-delivered meals, all at no additional cost. Plus, your zip code may have coverage with the Give Back benefit that adds money back to your Social Security check every month. Look, with the uncertainty of the virus and vaccines, you need to get everything you're entitled to. Here's the bottom line. Call to get significant benefits at no additional cost and see if your zip code has coverage with the Give Back benefit. Millions of people have trusted the Medicare Coverage Helpline. You can too. Call now. It's free.
Call 1-800-924-3920. That's 1-800-924-3920.
Welcome back. We're talking to Dr. David Kelly of JP Morgan Asset Management. David, thanks so much for staying with us this morning.
Sure, Jeff.
So we talked about kind of the macro, and there are going to be a lot of trials and tribulations that any administration will have to deal with, but certainly this administration. Let's try to break things down now for the individual investor, but also that financial advisor who is servicing its constituency, institutional investors, but also individuals. Let's start with the FAs. What are FAs thinking about, financial advisors thinking about now going into this new administration?
Well, I think the most important thing to think about is actually the state of financial markets. I don't expect to see big changes in regulation. I genuinely believe that Joe Biden is going to try to rule as a centrist. I think that's his natural instinct, but also from a political perspective, if you look at what happened in 2020, we've got a nation very badly divided. I think he's going to do his best, his level best, to try to bring people together. I don't think he's going to try to move to an extreme. And when it comes to regulation, I think therefore he will probably not have too heavy a hand in new regulations on the financial services industry. But for financial advisors, the real issue is not where we are, but where we're going. I mean, we've seen a huge accumulation in people's portfolios. People have done very well. The problem is that if you look at valuations right now, the potential long-term returns from large cap US stocks or from government bonds are very low because of the valuations. And so I think this is a time to talk to clients about diversifying, explain why you have to diversify, even though these assets have done very well in recent years.
And in terms of the traditional, is the 60-40 traditional asset split, that's 60% equities, 40% fixed income, is that a dead thesis, or is that something that will continue to drive financial advisors with maybe some slight modifications?
Well, I think it needs a fair amount of tweaking. I mean, the idea of 60% in risk assets and 40% in defensive assets, that makes sense. I mean, obviously it depends on where you are in life. Nothing wrong with that. But within the 60, I think you have to, be more active. We've seen a huge dispersion in valuations between the most expensive companies and the cheapest companies in the S&P 500. And that, I think, means there's a lot of risk in index products. I think there's a lot of froth in there, particularly in the mega cap top 10 stocks in the S&P 500, which are very expensive by historical standards. So you want to think about going active and try to look perhaps at some value stocks and sort of split up your investments within U.S. equities. And then 68% in equities, yes, but I think a very large chunk of that should now be in international equities. I have no problem at all in having half in U.S. equities, half overseas, because we do think there'll be stronger growth overseas in the long run, particularly in emerging markets. And frankly, overseas equities are a good deal cheaper now than U.S. equities after a very good year for the United States last year.
David, you mentioned sustainability and ESG. That has been a consistent theme in 2020 and prior. It's really grown. You mentioned the Biden administration really signing back on to the Paris Accords, and this could be a significant push in terms of regulation. What do financial advisors need to be thinking about, potentially about maybe evaluating sustainability or putting that into their client portfolios?
Well, I think the right way to think about this is not, I don't think people should be lecturing their clients on doing the right thing by the world or by the, that's everybody's entitled to make their own choices and how they want to contribute to society. I think the better way to look at this is think about, we're going to be looking for growth going forward. That's going to be the problem, because the U.S. economy, when it hits full employment, is going to be growing rather slowly. Where do you find growth? Is growth going to come from fossil fuel industries, from oil and gas industries, or is growth going to come from new technologies to make the world less dependent on carbon fuels and on hydrocarbons? And I would argue that it is these green areas that are going to grow the fastest over the next 10, 15, 20 years. So I think you want to latch onto that, but you need to have good managers who are genuinely finding companies that can thrive in this space. There's going to be a lot of government focus, particularly in Europe, actually, but also really around the world, on how do we do things in an environmentally more friendly way. They're going to be winners and losers, and the trick is to find the winners in the green space who can not only do some good for the world, but also actually make you some money in the process.
Shifting gears to individual investors, many that are listening to this program and many investors in general are longer-term investors, meaning they're not looking to move in and out. And that's not necessarily the case with institutional investors and who tend to move around and hedge and do other types of strategies. But when you're talking to the long-term investor, does their strategy potentially need to change? Do they need to revisit their strategy given that there's a new administration? Forgoing taxation, because I want to put that separately. But in general, in terms of investing, are there different principles depending on Joe Biden as president or Donald J. Trump as president?
Not too much, actually. I mean, obviously there are issues of corporate tax rates, but I don't think corporate tax rates are going to move in the next few years anyway. I think the bigger issue is you've just got to look at where we've been and where we are in terms of valuation. Because what we've seen, last year was an incredibly traumatic year for all of us. But it was also a year of great confusion. And when people are very confused and traumatized, what they tend to do is just stick with what they've done. And in fact, what investors did massively was double down on their original bet. So we saw a lot of money going into growth stocks and a lot of money going into long-term bonds. But that has left valuations extremely stretched. And so what people need to look at is, don't think so much about the administration. Think about what is honestly in your portfolio, what's expensive and what's cheap. And what's cheap out there that you don't own any of. And I think that's the question people need to ask. Now, you've always got to think about Uncle Sam. Think about, you don't want to be getting paying a lot of capital gains taxes to make changes in your portfolio. You've got to figure out a tax efficient way of doing whatever you're going to do. But still, I think people need to ask themselves deep questions about, are they in fact overweight now the stuff that is the most expensive stuff in financial markets? Because if they are, they really should do something about that if they want to protect what they've earned and accumulated in recent years.
That's certainly good advice. David, let's bring back taxation. You mentioned it. I mentioned it. I guess I started it. Any thoughts about rolling back some of these tax cuts that we saw during the Trump administration, the current administration up until 12? The impact on capital gains we've delayed through the CARES Act the required minimum distribution, or at least it was delayed in 2020. But any thoughts there on taxation? I know you mentioned that President Biden would be more of a centrist, but any thoughts about kind of revisiting some of those tax reforms?
Well, I think Joe Biden did run on a program which was paid for, some of it was paid for by higher taxes on individuals earning over $400,000 and on raising the corporate income tax. But that's what he ran on. But if you'd had a blue wave where the Democrats took 53, 54 seats in the Senate, maybe that would have happened. But the way I read it right now is there is no great appetite to push up taxes. I think a lot of freshman congressmen in the Democratic Party, you know that, there's the margin is very thin in the House. The margin couldn't be thinner in the Senate. They're going to be looking forward to 2022, and frankly, politicians who haven't paid for their promises have done just fine. So, I could see Joe Biden talking about, another coronavirus relief bill because we need to do it. I think you'll see Pete Buttigieg introduce a infrastructure bill to try to deal with this long-standing problem. I think those can get votes in the Senate. I just don't think there are 50 votes in the Senate for an increase in corporate taxes. So I don't think you're going to see that change in taxation. Now, part of me is happy because I don't want to see higher corporate taxes. Part of me is worried about it, though, because if we don't do something about our fiscal situation, I do think there are problems down the road in the middle of the decade. And so I am worried about our politics kind of breaking down in terms of us paying our bills. But I don't expect to see higher taxes in the short run.
Well, I guess we will see after 12 p.m. today. Dr. David Kelly, it's always a pleasure to check in with you. Really appreciate making time for us, the audience and myself, and we look forward to catching up with you again very soon.
Very happy to do this, Jeff, and look forward to doing this again.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, and then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, all in one place, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.